Hi, and welcome to the weekly market update from Morton Brown Family Wealth. I'm Dennis Morton here with Katie Brown and Cody Demmel. How are you guys doing?
Hey, Dennis. Great. How are you?
Good, good. So we made it through November, made it through the Thanksgiving holiday. And if we had told you heading into the election season that November would be one of the best months in history for the stock market, you probably would have thought we were crazy. But here we are. It's time to recap what was really an extraordinary month for the stock market, especially. We're also going to talk about Tesla and its addition to the S&P 500 index. And we're going to close with some discussion about stimulus conversations and how that could play out politically between now and the end of the year. So, Cody, tell us a little bit about what happened in that wild month of November.
So November we saw a little bit of rotation into some of the underperformance sectors so far this year. So in some of the value plays, financial, energy, we saw some outperformance in November that helped a lot to have the best month that we've ever had, especially in small caps. I mean, they were up almost 20%. The Dow wasn't the best month ever, but it was the best month since 1987, which is pretty crazy to think about with everything that's obviously gone on this year.
Just to clarify, what we're looking at here is these are how different factor funds or different sectors performed in relation to the S&P 500. So above the line performed greater than the S&P 500 and below the line performed, worse than the market overall, which is incredible for to see financials pop as much as they did in November and industrials, just some areas that we haven't seen much of this year.
Right. And we've talked a lot about, it's one thing to say what the stock market did, but then to ask the question, what type of stocks? So, while the Dow was making headlines for being up hundreds of points, which might be a 1 or 2% move, you were seeing 2 and 3% moves every couple of days in small stocks and energy, real estate, all those other numbers. So again, that benefit of diversification, you got a lot out of international and a lot out of some other places, maybe not as much out of the NASDAQ as you had so far this year. So a little bit of rotation. So speaking of valuation and indexes, Tesla is being added to the S&P 500 index. And just to know how this process works. So when you buy an index fund or ETF, it's made up of the 500 stocks in the S&P 500 index. But Vanguard or Fidelity don't get to choose what goes into that. There's actually a committee at Standard & Poor's that uses a very secretive formula to decide which stocks get into that 500 index. Well, Tesla now meets the criteria, both in terms of profitability and its size and everything else. So Tesla is going to be added into the S&P 500 index in December, which is a pretty big move. It's not like it enters as the 478th largest company and works its way up. It's coming in at number 6 or number 7, bigger than Walmart. So Cody, talk about the implications of this. I mean, all of these funds are going to have to buy in on one day, right?
Yeah, so they all have to buy in on December 18th. They are saying that the purchases are going to be around $51 billion that they have to buy into Tesla, which is the largest by a far amount that they have to rebalance. So, they have to sell the other stocks to purchase Tesla.
Right.
And how has Tesla reacted thus far to the news? I think that's fascinating.
I think the number was, so there's about $51 billion worth of Tesla that needs to be bought to put in the index, which is great. You think, all right, let's buy that stock, and the demand will shoot through the roof. Except there's already been $177 billion worth of Tesla stock purchased since the announcement. So it's tripled the amount that people have poured into the stock. So it just comes back to, if we were looking at buying an individual stock, you have to say, what price are you paying for what potential growth? When you buy an index fund, you don't really have that choice. They have to buy what's in that index at this price at this time. There's no discretion. So I think if you own an S&P 500 index fund, you're buying some Tesla this month, no matter what the price. And it's going to happen later on. It could be a little more volatile. So Katie, stimulus. What's happening in DC these days?
Well, a lot of discussion. Unfortunately, they have not yet come to consensus on what the next stimulus plan is going to look like. And we're getting a little tight on time. So some decisions really need to be made here before December 11th, or we're going to have a government shutdown because they need to figure out what the budget's going to be for a new stimulus package. But a lot of a lot of conversation. There are packages that are being presented anywhere from 500 billion to 900 billion. A lot of money flowing, into small companies again. So extending the PPP loans, those payment protection loans, and increasing the unemployment, that additional amount that goes to unemployment. I think they're still figuring out that range. Is it going to be an extra $300 per week, or an extra $600 per week? One of the things, though, that was interesting in the most recent bill is that they took out the individual stimulus checks to individuals.
Right.
That was not part of this most recent plan. So we'll see, how things shake out. But I think there's going to be a lot more conversation, a lot more news here over the next week, and hopefully once again come to consensus soon, because we're seeing the stress again. Definitely seeing it.
So just some of that stress and what's happened between October and November. You want to explain what we're looking at here?
So this, speaking of the stress that some of the businesses are seeing, so this chart goes over the change that so the businesses that are opened compared to mid-October till mid-November. So for example, entertainment was down almost 10%. So businesses that were open, almost 10% of additional entertainment businesses had to shut down in October to mid-November. Education, for multiple different reasons, down around 6%. So I mean, just seeing this decline when we've already been obviously struggling is not a good look, and that's hopefully why we'll get that stimulus package and some bipartisan agreement there.
Yeah.
Right.
And that's a good point, because they were already struggling. It's not like they got back to par, and now there's a 10% reduction in entertainment. I mean, they were still running, at a fraction of the profits that they were doing a year ago. So.
Yeah, I mean, I think from as policymakers try and figure out, what a stimulus package should look like, some of the measures are so hard to pin down. I mean, we were looking at a couple of data points. So unemployment peaked at 14% back in April, went from 4% up to 14% in a month. And it since came back down below 7%. It got to 6.9 in October. Just for some context, during the great financial crisis, unemployment got as high as 10%. And in 2009, the recession ended in spring of 2009. We didn't get back below 7% unemployment until December of 2013. So 4.5 years after the recession ended is how long it took to get back below 7. It's taken us 6 months to get below 7, and it looks like this. It's just a precipitous, a rise and precipitous drop. So if you're a policymaker, where are you applying the stimulus? Because hiring is coming back in waves in certain sectors, but then you have businesses closing down in others. So it's just a challenging time to pin down where this needs to happen and who's, how to stimulate in the right places.
Yeah. I kind of have to chuckle a little bit, because as you're saying, it has taken us months. I feel like that phrase has come up so many times this year, whereas normally we would say it's taken years to get from point A to point B. This year, it's taken months. It can just be applied to so many different areas. The market correction, the market drop in the first place, the unemployment, that's a very common phrase this year.
I mean, I was 25 years old when this year started, so that the pace is accelerating dramatically. So, all right, guys. So we're heading into the holiday season. We respected the bird last weekend, and we didn't do too much, but I'm sure you guys have leaned in and captured your first holiday movie of the year. Katie, what was it for you, or what is it usually?
We always kick off the year with Home Alone. It's just a fun, family movie. Our kids love it, so we've already watched Home Alone 1, 2, and 3 so far. I think my daughter wants to watch it again this weekend, but we might need to move on to the next movie.
Even Macaulay Culkin didn't watch 3. Tony, how about you? What's your go-to to kick off?
I don't really think we have a go-to, but this year we went to Elf. Just, you can never go wrong with Elf. It's a happy movie. Yeah. So yeah,
that's a good one. Yeah, we normally for us it would be good old Jimmy Stewart and watch It's a Wonderful Life and check that out. This year though, we heard about all these Hallmark type movies that were flooded onto Netflix and everything else. we actually looked back and found one that we had watched years ago. That's a wonderful story about a woman who's dissatisfied with her life around Christmas time and crawls her way through her clothes dryer into an alternate universe where she married a different high school sweetheart and spends the whole movie trying to get back to the life that she left behind. It's just a heartwarming story involving a clothes dryer at Christmas. And it's just the kind of thing you can only catch on, Hallmark Channel.
I wonder how many things she tried to crawl through before she figured out the dryer was the one.
The
Like,
dryer,
go through.
the dryer was speaking to her. There was a voice coming out of it. That's how she knew that was the appliance to crawl through and not the coffee maker.
Okay.
Oh my gosh.
Yeah, these plots are thought through. There's no holes in them. So
God, I love those Hallmark movies. They really deliver.
it is great. So yeah, well, hopefully lots of time to catch up on those. So, all right. Well, we hope everyone's doing well. We hope you're staying safe and have been able to spend time virtually or in person with your families. Hope you had a great Thanksgiving, and we look forward to catching up with you soon. Be sure to join us next week. We're doing a live market update, and we'd love for you to join us where we talk a little bit about the year that's been, talk about the post-election investing environment, and look ahead into 2021 to some things that clients and investors should be interested in. So look forward to you joining us next week. Till then, we'll talk to you soon.
Thanks, everybody.